So Doc was a really popular developer inside Roblox, and he designed a game called Sonic Eclipse Online. So it was based on Sonic the Hedgehog and what children, don't love Sonic. So he created this game on Roblox, and thousands of children are playing Doc's game and looking up to him as a developer that they, want to be friends with, that they want to talk with, that they want to, understand what are the next developments that are coming with his game. So he actually had a cult-like following of children across Roblox and other platforms that he would talk to kids on, like Discord, Twitter, now X, Instagram, Snapchat. He was across them all.
He's not a good guy.
He is not a good guy. Turns out,
to say the least. Tell us a little bit about what he ultimately was doing.
So Dr. O'Fatnick grew this following through 2020 in the height of the pandemic, when children are really attracted to Roblox and were wanting to play in the online spaces because they're trapped at home. And in that year, he was exposed as being predatory towards some of the young kids who were working for him on Roblox. So a lot of gamers tried to shut him down, get him off the platform. And in the end, it's kind of a long story. You have to read it to get all the details. Yes. But they weren't successful. And fast forward 18 months later, he was actually arrested by the FBI for, I don't know if you want to get into it.
We'll get to that in a minute, because I want to bring in Cecilia to talk a little bit about what makes Roblox unique. Because we talk a lot about social media platforms and the restrictions on age with social media platforms. But Cecilia, you cover gaming, and the whole idea with Roblox is that this is a place that caters specifically to kids. It's for kids. Talk a little bit about the intricacies and sort of what makes Roblox unique in terms of what is available online for kids.
It's a great question. So most social media platforms don't allow people under the age of 13 to sign up for them. That includes Discord, that includes Instagram, but Roblox actually welcomes people who are under 13. About 40% of its 78 million daily active users are under the age of 13. And, parents have the ability to toggle on certain safety features on Roblox, but by default, you can make an account if you're, 6, 7, 8 years old and talk to strangers in a variety of games. A lot of the video games that are designed for children, a lot of video games appeal to children, of course, but games that are designed for children don't actually allow children to communicate with strangers openly. You can't type to them on your phone or on your keyboard or through your video game console. A lot of them have these sort of like canned messages you can send, like, hello, how are you? Do you want to play a game together? But on Roblox, you can have really robust conversations and develop relationships.
Cecilia, and I kind of jumped the gun there, kind of cutting to the chase, but I want to ask about, you actually created an account that said you were a 4-year-old. Tell us about that.
Sure. So to test Roblox's features and what was available to us, Olivia and I will create accounts just to understand exactly what would the experience be for someone who is of this demographic. So I did create an account as if I was 4 years old on Roblox, and I entered a game, and somebody who was in that game who understood that I was 4 years old attempted to groom me over a direct message. He asked if I was single. This person asked if I was single. And when I told them that the account was 4, they said age is just a number with a winky face, after trying to get me to share my Snapchat. It was an alarming experience. It was unplanned. And we were very, very surprised.
Cecilia, there are supposed to be tools in place, whether they're AI or actually human moderators, to monitor this sort of thing so it doesn't happen. At least that's what Roblox says. Tell us about the moderation features and why something like that wasn't caught and it did get to you, even though you had registered an account saying you were a 4-year-old.
Sure. So Roblox says that safety is foundational to its platform. The platform's 2 decades old at this point, and it does have chat filters and artificial intelligence designed to catch bad words, grooming. It also attempts to bring users off platforms, which Olivia and I learned predators really like to do. They like to maybe meet a child on Roblox, then move them to somewhere that's less moderated, like Snapchat, like Discord, like Instagram. But what was really surprising to me was that the person who was trying to groom the 4-year-old account, they didn't say, what's your Snapchat? They used this is pretty clever, they used the ghost emoji, which is Snapchat's icon.
Yeah. So that's a
Yeah,
way to
and-
sort of get them offline and somewhere else. And the idea was it would get around the AI.
Exactly. And when they asked me to leave the game, they spelled it Leve. So one of the big challenges for Roblox is 3,000 moderators is what we reported in the story, is that predators and bad people on the internet in general will misspell words, will find ways around the chat filters, and that's just something that's so hard to keep up with.
All right, but when you have a platform like this, the company's got to be on it, or police have to be on it, or somebody has to be on it. Turns out there were some vigilantes, actually, Olivia, who were on it and kind of doing their own police work on the platform.
Yep, I mean, part of the reporting for this story that Cecilia and I were trying to attempt is if Roblox isn't able to police its platform, who out there really is? And we did find this group of young gamers, vigilantes, who feel like Roblox's moderation isn't doing a good enough job to protect kids online. So they've actually criticized the platform on YouTube and on Twitter and highlight predatory behavior and ask the company to take it down in a public space. So we spent quite a lot of time trying to understand how they operate, what they're looking for, and what their process is to try and find grooming or predatory behavior on Roblox.
Tell us about Ben Simon.
Well, Ben Simon he describes himself as an anti-hero. He's a very controversial figure. The company has sued him for $1.6 million, and the allegations against him aren't nice. Things like uploading photographs of Adolf Hitler onto the platform, which he denies, but also harassing the company employees, which he admits that he has done in the past, using homophobic slurs on Roblox. So he's he's relatively young now, but he created a huge YouTube following by highlighting predatory behavior on Roblox and being kind of this rebellious vigilante moderator in a sense. So he's got over 1.2 million followers on YouTube who really tune into him specifically because he knows so much about Roblox and the platform, and a lot of children now who play the game will actually go to Ben Simon, or Ruben Sim as he's known on YouTube, and file reports to him because they think they have a better chance of getting that content removed if he posts about it rather than through Roblox's normal moderation report system.
Is part of the problem just Roblox, right, kind of protects the kids in terms of their actual identities, and so as a result, if you're a predator, your identity is protected?
Yeah, that's right, Carol. That's one of the hardest things for Roblox is when you create a user account, you're encouraged to be anonymous. So when you sign up for the platform, it actually says do not use your real name. And so Cecilia and I, for this story, we spoke to a lot of people who work at the company, a lot of child safety advocates, and they raised concerns over the fact that for Roblox itself, identifying who is behind that avatar is really hard. It's just kind of a group of pixels playing in a game. You don't know their name, their age, their location, and what their intentions are.
But Cecilia, as you and Olivia point out in the story, like Doc did, he was able to build this business using Roblox as a platform. How can Roblox pay developers like Dr. O'Fatnick if they don't know who they are?
It's a great question, and it's one that we asked Roblox about multiple times. So a lot of people are able to create businesses on Roblox selling items, virtual items, and things along those lines. They make their own video games. There are people who have made hundreds of thousands of dollars doing this through Roblox. And Roblox will send out money to whomever, fills out the forms. And in this instance, it was tough for Roblox to identify Arnold Castillo or Dr. Fatnik, who was the predator Olivia and I investigated.
Are any of these concerns kind of, Cecilia, slowing down the growth of this platform and this company?
There have been scattered concerns around safety on Roblox for a couple of years now. There are a couple of lawsuits against the company that are alleging that it's not as safe as it's advertised. But Roblox does continue to grow, and one of the goals Chief Executive Officer Dave Pizzuki has is to reach 1 billion daily users, which is it's over 10 times more than what it has today. Roblox is growing. It's free on basically every platform you can think of, and kids love it. It's not just a video game. It's not just a platform for people to make video games. It's really social media for the younger generation, and I don't see it becoming less popular anytime soon.
Olivia, you've done a lot of reporting on sextortion, predators online, not necessarily on Roblox, but on other platforms. What is unique about Roblox's platform that makes it so difficult for authorities to catch up with these folks, but also such a fertile ground for them, like an attractive platform?
Do you mean to predators?
Yeah.
Yeah. I mean,
because those are the things that need to change, I would imagine, if something to prevent this from happening further.
The protagonist in this story is Dr. O'Fatnick, as we've talked about, and his real name is Arnold Castillo. He was arrested by the FBI in early 2022, and I went to see him in federal prison up in Otisville, and I asked him that question, you know, what about Roblox draws predators into the platform? And his response was accessibility, that it is just very easy to create an account and just jump from game to game and have access to thousands, tens of thousands, you know, if not millions of children on a daily basis. So I think that's what makes Roblox unique. And not only is it easy to make an account, but you don't have to give any identifying information over.
You guys put in your story, it's available for free on a wide range of devices, iPhones to PlayStations to PCs. It takes less than a minute to create an account, enter a date of birth, and join in an all ages rated game. I mean, it doesn't take much. So law enforcement, where are they on that? You've talked with law enforcement.
Yeah, I feel like law enforcement are trying to catch up with technology, just like regulators are, right?
Always.
You know, we're always one step behind. And while Roblox has been around for more than 2 decades now, it's created in the early 2000s, law enforcement is still figuring out what this platform really is. And I think a lot of people view Roblox as just a video game platform, but it's not. As Cecilia mentioned, this is really social media for the youngest generation.
Right.
Kids are talking to people through these games, and I don't know if parents know that. I don't know if law enforcement know that. There was one case that we were reporting where we did speak to a detective, and I asked him about his understanding of Roblox, and he said when the young victim was recovered, he asked her how she had met the predator, and she told him that she met him through Roblox, and this detective had never heard of Roblox before.
Hey, 15 seconds, Cecilia. Tell us what Roblox has done in response to what's happened over the last couple of years, very briefly.
Sure. So Roblox has made some efforts to age up its audience. Roblox is known as a kids game, and so they're trying to have games that are more attractive to adults, not just kids. Over the last couple of years, Roblox has also added more stringent moderation for kids who are under 13 and hired more moderators.
Unbelievable stuff. I always think about, you know, you do those panels with folks from the Silicon Valley, and they're like, my kid doesn't get a phone. My kid doesn't
My kid's not going to get a Roblox, I'll tell you that.
Olivia and Cecilia, thank you so much. Unbelievable reporting. Check it out. It's in the new issue, the monthly issue of Bloomberg Business Week. This is Bloomberg Radio.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. With the Dow, the S&P, they're both higher. NASDAQ in the red right now. We got the NASDAQ Composite Index swinging between gains and losses. Choppy session with NASDAQ now down by 1 point. Little change there. S&P holding on to a gain of 0.2%. Was negative last update. And the Dow up 0.7%, higher by 281 points. Back above 40,133 right now on the Dow. 10-year 4.26%. The 2-year coming in at 4.44%. Spot gold down $37 the ounce, down 1.5%. 23.60 the ounce on gold, while West Texas Intermediate crude up 1%, 78.38 a barrel. Traders betting that the Fed will be able to engineer a soft landing spurred a rally in riskier corners of the market. Stocks rebounding today after a sell-off that jolted markets around the globe. Well, as for the selling that we have seen in recent sessions, Cameron Dawson is Chief Investment Officer at New Edge Wealth.
I think that there is very much a technical aspect. We got incredibly overbought, mostly in tech and growth. And I think the important point is the last 3 months of that move really didn't have anything to do with earnings moving higher. It was all valuation. So it was sitting on really fragile ground.
Cameron Dawson of New Edge Wealth. A Colorado judge has issued an order temporarily blocking that proposed $25 billion merger of Kroger and Albertsons, which has been challenged by the state attorney general. Right now, shares of Kroger, they're down by 1%. Albertsons up 1.1%. Recapping, the Dow, the S&P, and now NASDAQ all back in the green. Cannot ignore the Russell 2000 up right now by 1.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it.
Spending?
Spending?
Are you spending money?
I feel like I'm always spending money.
That's true.
I wouldn't say it's always discretionary.
When you've got 2 little critters.
Yeah. Let's just.
Money goes out a lot.
Yeah.
When you have kids in general.
Easy come, easy go, as they say, right?
Well, listen, you're helping out the economy.
Yeah, okay. Speaking of helping out the economy, U.S. economic growth accelerated by more than forecast in the second quarter. It illustrates that demand is holding up under the weight of higher borrowing costs. Personal spending advanced 2.3%. That's also more than projected. We got those numbers this morning. So, Carol, there's certainly 2 measures of the economy that came in stronger than expected. Yet, how are people feeling?
It's an important question. I mean, you want to know what the sentiment is right now, right? Where are the stresses? These are things that Katie Thomas, lead at the Carney Consumer Institute, tracks. She is back with us from Pittsburgh. Katie, good to be talking with you. I got to say, you guys do have out a new survey. You talk about global consumer stress. How stressed out are consumers at this point?
Yeah, so consumers are still stressed, but interestingly, we're starting to see little storylines peel apart, unsurprisingly. So, for instance, when we talk the global consumer, last cycle, 11 out of 12 countries moved in lockstep. So they all moved in the same direction, whereas this cycle we saw a split. So 7 got a little more stressed, 5 got a little less stressed. And so you're starting to see the specifics of exactly how, in particular, local politics, government politics, and conflict, and then, of course, the specifics of financials are impacting consumers. And so in the sorry, go ahead.
Well, I was going to say, just when exactly did you do this survey, just so I have an understanding of the time frame?
We ran this survey about a month ago in June. For U.S. context, it was previous to even the debate. So as we think about politics, in some ways, I think it removes the noise of politics, the Trump assassination attempt, and the change over the weekend. But it was, that stuff is not factored in yet.
All right. So do you think, based on your results, do you feel like since the debate, since all of the U.S. political news, do you feel like anything has changed dramatically in your view?
Probably, we saw when we talked to consumers, 48% of American consumers said they were pessimistic about the country's political future, whereas about 28% said they were optimistic and the rest were just indifferent. And so I would guess we've seen those numbers switch around a little bit in the last month, but ultimately we still feel like the general theme on the consumer is the same, which is this feeling of resignation. So even though things are changing, there's still a lot of uncertainty. So we're seeing these persisting pressures with with, inflation, with interest rates, and then politics. Well, not, certainly things are changing, but there's a lot of uncertainty. And that's leading to this like consumer that feels like they have no agency or ability to impact any of the things that are going on in their lives. They're just subject to all this strife. However, as you noted at the top of the show, that doesn't mean they're not spending. So the reaction to this resignation, uncertainty, and frustration is manifesting in all different ways. And some of those ways are at the mall and at the stores.
Well, how do you explain the difference in behavior in terms of, we've had people on the show that say, don't do what don't listen to what the consumer says, listen to what the consumer does. How do you explain the discrepancy there?
Right, because they're spending based on
exactly.
and it is a backward-looking report, but
they're still spending.
yeah.
It is. I mean, there's a couple ways to look at that. One is exactly how we actually try to analyze the consumer. So we have two separate consumer measures. One is called sensitivity, which is just voiced stress. So that's your more traditional consumer sentiment. And the reality there is, frankly, people will always say they're stressed. And so that's exactly what we are trying to offset with our other metric, which is around this idea of flexibility and agency. It's when I start to feel like I'm losing control, that's actually a leading indicator. So we're starting to see a little bit of that. One of the measures in particular within that is job security. So it's not necessarily the raw employment numbers or labor market numbers, but it's do consumers personally feel like they have some sense of job security. So it's really trying to peel back some of those different layers to try to kind of assess that say-do gap that we see with consumers, pretty much across all topics.
I mean, how much of this can change? Like, it's interesting. I feel like markets have gotten a bit more volatile. Economic data points can sometimes, while they kind of seem to say that they're pointing towards a soft landing, it can depend on the day when we might get something that might kind of surprise us. Having like this morning's GDP report. Having said that, in terms of consumer sentiment, how much can it swing, perhaps, from week to week, from month to month?
I think you're right that, frankly, with any consumer trends, they don't actually move in quite as dramatic of a fashion as we want to sometimes think they are. So think of any of the trends that you discuss over the course of your show, whether it's sustainability or health and wellness, all of that. They were slowly marching in a certain direction, but none of those things are happening overnight. And it's the same with consumers. So even when it comes to stress, one example is of a recent election was in Mexico. And so the Mexican election had happened prior to us running the latest version of this survey. Now, we saw their geopolitical stress go down, but then stress in other areas go up. So you're almost seeing a shift in the pie rather than some massive reduction in stress. So I think the devil's going to be in the details, Carol. I think there are different stressors, but at a macro level, it's always going to be a little hard to see some big swings.
Which is why Timmy and I walk in every day. I'm stressed. It may be different. It may be that the train bothered us, or there's something, dealing with, I don't know, shopping, getting stuff for your family, or work stress. Like, it just moves around.
Then I get here and I'm so relaxed as we prepare for our 3-hour show.
Is it that Zen tea you have every
morning? It's that Zen tea, among other things. Katie, at the end of the day, the idea with a lot of the work that you do at the Carney Consumer Institute is to help companies reach consumers, no?
Yes.
So
absolutely.
So then, what should companies be doing to reach consumers in the environment that you described?
Should they do what Chipotle is doing, offering you more meat and rice?
And taking the hit on the bottom line.
Exactly.
Right. Well, and that's actually a great example of what I was about to say, which is what we're really encouraging right now is clarity and consistency from brands in the most straightforward ways. So a lot of the areas we've seen frustration are around misleading or deceptive things some brands are doing, shrinkflation in particular. If you ever want to go down a rabbit hole, I encourage the shrinkflation subreddit, where people are pointing out, for those that don't know, it's when you keep a price the same, but you reduce the amount in a package. You see it with detergent, with ice cream, with all sorts of different categories. In some ways, you can get away with that to try to keep the price neutral. But I saw one example for, I think it was pierogies, where it went from 12 in a pack to 9. So if you're a family of 4, that immediately changes the math of what you're buying there. Similarly, with some of the summer sales around Prime Day and, across the board, you see actually slowly an uptick in prices, and then the discounts aren't really discounts. So it's that kind of behavior I'd be particularly watchful of is, with consumers trying not to pull a bait and switch. Just keep it simple, keep it straightforward. And try to really deliver on your core offering.
All right, two things. I want a pierogi index. I think that would be really kind of good. And I'm really kind of hungry right now. I would go for a few pierogies. Wouldn't you go for a few?
I love pierogies.
We're so easy today, aren't we?
I don't think I had a pierogi until
food.
I didn't have a pierogi until I moved to New York.
Was that your first one?
That was my first one.
Yummy, yummy.
Oh, I'm from Pittsburgh. You should come here. There's a whole Polish contingent. You can find a pierogi.
I actually heard there's a Pittsburgh pierogi festival.
Yes, there's
Yes.
a festival. It's our their mascot sort of for the Pittsburgh Pirates. There's a pierogi
Yeah.
race. It's a whole thing.
There's no more Pittsburgh example that you could have given, Katie, than buying a pack of pierogies. So I
Top of
appreciate
mind.
that. Thank you.
Kielbasa? You do kielbasa too?
Yeah, it's all part of it.
I grew up on kielbasa. All right, gotta love that. Katie Thomas, like we said, we are super, super hungry, but good stuff. Check on the consumer, always important. We talk about how important it is to the economy. We certainly played out in economic metrics, but good to get another take on it. Katie Thomas, she's lead at the Kearney Consumer Institute, joining us from the home of pierogies, Pittsburgh. Can we say
All right. Yeah.
that? Yeah.
Cool.
You're hungry now, aren't you?
Yeah. Who isn't? Just still thinking about this. You brought up Chipotle. You started it. You brought up Chipotle.
What can I tell you? It's that kind of a mode.
Yeah,
it's
it
kind of
is.
my Friday, so I'm in a Friday mode.
It is your Friday. We're going to miss you tomorrow. Hey,
thinking about you.
we're actually seeing stocks move a little bit into the green now. The S&P 500 up 0.4%. The Dow up 0.9%.
Up and down we go. All right, right now, though, let's get a check on world and national news. Back to D.C. we go, and Amy Morris. Amy, all yours.
All right, thank you, Carol. Israeli Prime Minister Benjamin Netanyahu visiting the White House today, discussing the war in Gaza with President Biden and Vice President Kamala Harris. Biden's aiming to get Israel and Hamas to seal a U.S.-backed proposal that would release the hostages in Gaza over 3 phases as a legacy-affirming achievement. White House officials said the negotiations are in the closing stages, but they still have more issues to resolve. Former House Speaker Nancy Pelosi is among the latest prominent Democrats to endorse Vice President Harris for president. She did it at an event with fellow Democratic women in Congress. We get more from Bloomberg Big Take host David Gura.
The reason for her speaking today was she wanted Joe Biden to have the opportunity to give the American people an explanation of why he's done this. We got a little bit on that and kind of situate his presidency in history, had that in that speech as well. But he talked about passing the torch. Now that that's out of the way, I think that she feels liberated to endorse.
David Gura hosted the Bloomberg Big Take podcast. New polling shows Donald Trump leading Harris in 4 swing states, Arizona, Georgia, Michigan, and Pennsylvania. But it seems to be kind of a tight race. The Emerson College The Hill poll shows that in Michigan, Trump leads by 1 percentage point and by 2 percentage points in both Pennsylvania and Georgia. All of that's within the margin of error of 3.4%. They are tied in a 5th swing state, Wisconsin, and Trump leads Harris in Arizona by 5 points. New York Governor Kathy Hochul is being sued over her pause on the city's traffic congestion pricing plan by an advocacy group that claims she has no legal authority to freeze that program. It would have charged most drivers $15 to drive into the city. In its lawsuit, the City Club of New York asked the court to force the New York Department of Transportation to implement the plan, which is intended to curb air pollution and help finance billions of dollars in transit infrastructure upgrades. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a very mixed market. The Dow higher. We've got the S&P swinging between gains and losses higher right now. NASDAQ in the red. But let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, it's been a choppy day with stocks right now performing mixed. The Dow is up 290 points, S&P higher by about 5, with the NASDAQ turning into the red. U.S. 10-year yield is at 4.26%, and small caps are up 2%. Some of the 11 main S&P sectors are trading higher, though, led by gains in energy and industrials, while utilities and communication services are the worst performers. NASDAQ Biotechs rise 65 points. Transports are higher by 320. Semis are little changed, while the VIX is lower by 4%. Leaders in the Dow, IBM, Salesforce, and Boeing, while Honeywell, Microsoft, and Walmart are the worst performers. On the earnings front, IBM jumped the most in 6 months after strong software revenue. Lululemon fell after pausing sales of its breeze-through yoga wear, while Edwards Lifesciences plunged the most since 2000 after sales missed estimates. And in deal news, KKR agreed to acquire educational software firm Instructure in a $4.8 billion deal. Wrapping things up, look for earnings from Skechers, Deckers, and Juniper Networks after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey Lipschultz. And to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we're going to get to the markets. Obviously, we've got about 18 minutes left in the trading session. Having said that, just thinking about the conversation we just had with our team about the Roblox story.
Yeah, Lydia Carville and Cecilia D'Anastasio.
I mean, certainly troubling, certainly concerning, incredible work they did in terms of reporting. But, I feel like it's part of this bigger narrative that we see about, concerns about social media platform, who is actually on the platform, and is there enough oversight? But, Roblox was, my daughter's 21, and so it wasn't really a part of our world growing up. Yeah. It wasn't something that ever kind of popped up on her radar that she was interested in. But I was thinking about you. I mean, you've got younger kids, and social media is such a part of this world.
Yeah, it's something that I think about a lot. Maybe this is getting too personal, but my wife and I don't put our kids on social media, at least their faces.
I never put pictures of her on.
Yeah, I mean, it's like... it's a brave new world. Mm-hmm. You never know what people are going to do with pictures. Weird stuff has happened online.
Which makes sense. I mean, like you and I were just talking about like things we wouldn't do with kids. Yeah. And I always think about those panels I've done with tech, Silicon Valley types who did really say no TV, no computers, no laptops. I mean, you're like, my kids, no Roblox.
Yeah, in that sense, I think the bigger picture and what I meant to say was that it's just with this brave new world, you want to be in a position where you want your kids doing something that maybe you can have oversight of, and you need to make sure, or you want to make sure that what they're doing is in an environment that's safe.
Exactly. And I feel
whatever platform it's
not specific to anyone. Like we felt like that with all social media, that we had certainly guardrails around it, or approvals and so on and so forth. And this idea when she was underage that, listen, we're going to check out the platform. We have access, and we're going to check it out.
You see schools banning phones, even high schools banning phones.
Absolutely. All right, folks, we have about 15 minutes left in today's trading session on this Thursday. Bouncing around, call it flat, basically on the S&P and the NASDAQ 100, about 0.6 of a percentage point higher on the Dow Jones Industrial Average. So let's drive to the close. With us is Kathy Entwistle. She is Managing Director at Morgan Stanley Private Wealth Management, joining us on this Thursday from Ridgewood, New Jersey. Kathy, nice to have you here on us. What's top of mind for you in this market environment?
Yeah, thanks, Carol. Thanks, Tim. Great to be here. Top of mind is always, the economy and perception and what people are thinking, because a lot of times individual investors really react emotionally to the markets and what's going on in the economy or in politics or whatever the, interesting topic of the moment is. But really what we want to do is take some of the emotion out of that so that bad decisions are not made during times like these.
How do you do that though? I mean, how do you, emotion is in everything. Is it
just happens?
Yeah. I mean, is it just making sure that people don't open their statements, or they, I don't know. How do you do it?
It's conversations. I mean, I think back to, different time periods that we've had in the markets over the decades, like 2008, 2020, when we had the markets precipitously dropping and every day just going down further and further. And that's when you're literally on the phone from start to finish all day long with clients, just really trying to talk them through it to help them see a longer term view versus the day-to-day very scary moments that can occur and what you're seeing in your portfolio. So it's more about talking them off the ledge in a sense, like we don't want you to panic. We don't want you to look at this as like your portfolio's down significantly with the markets and it's never going to come back up again. Let's take this time to look at the long view and also see, since maybe at the moment everything is down, let's take a look and see what needs to come out of the portfolio and what we need to invest in, because when the entire market is down, the good, bad, and the ugly, it's actually a great time to reposition a client's portfolio and just make it a little bit cleaner, a little bit more healthy for what's to come in the future. Sort of like, where's the puck going?
Kathy, what are the stats that really matter to you? And I think about, even Bill Dudley in his Bloomberg Opinion columnist, of course, former president of the New York Federal Reserve, writing yesterday and noting that he's got some concerns that maybe it's time for the Fed to cut rates. He's been on the higher for longer camp. But one of his concerns, he said, wealthy individuals are still spending. That's not the problem. It's other folks who maybe have gone through all of their, maybe money they got during the pandemic or any of their savings, and that's the problem. You deal with higher income individuals. I am curious what metrics you follow so that you can properly manage their money. And does something like what's happening maybe on Main Street, is it as important to your world when you're managing their money?
Yeah, absolutely. So clearly the middle economy is struggling, and that is important because it does affect the markets and companies and profits. So the things that I think about basically are, how do we help clients align their priorities when it comes to goals and values and what their resources are versus what they want to do. So it doesn't matter if you have $1 million, if you have $100,000, if you have $10,000, or if you have $100 million. If you are spending more money than you have, or if you're not being thoughtful and having the right mindset when it comes to the allocation of your portfolio and what your time frame is, you're going to fail, right? You want to make sure that the resources that you have are matched up to what you're spending and what your goals are, and that you can align your portfolio with the right allocation so that over long periods of time, you don't have to worry about outliving your money or spending too much or having anxiety of what's going on.
Speaking of allocation, interestingly enough, you guys are actually underweight on equities and overweight when it comes to fixed income.
True.
Explain the strategy there.
Well, the strategy there is that we've had a run up in the markets. We have, sort of estimated values of companies. Evaluations are very high. So it's like when you go shopping and you see this dress that you love, it's like, okay, it's $100 today. And that's great. But when it's $50 and it's the same dress, it's better to buy it at $50, right? So it's the same with company stocks, with things like that. You want to buy things at a lower price and be thoughtful about how you add to your portfolio. So there are areas of the stock market where we think there are still opportunities to get some good value. And those would be areas like small stocks or international, global. The US markets are just overpriced right now. And clearly we have, the Magnificent Seven that's caused a lot of that, but there's other companies overpriced too. So it's a matter of finding like very good valuations and going there. So we're not saying don't go all out, but just maybe go, be careful where you select.
Hey, Kathy, thank you so much. Really appreciate it. Kathy Entwistle, Managing Director at Morgan Stanley Private Wealth Management, joining us from Ridgewood, New Jersey. Folks, just got about 10 10 minutes left in today's trading session. Call it little change, basically unchanged on the S&P and the NASDAQ. More to come.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got Ford shares down now by 18.1%. Ford tumbling after a big earnings miss that the automaker blames on a surge in warranty repair costs for older vehicles. Recurring quality problems have driven up Ford's warranty costs for years, but an $800 million spike in the second quarter caught investors by surprise. Ford again down 18.1%. Other automakers lower as well. Stellantis down 7.6%. General Motors down by 4.9%. Stellantis is the maker of Jeep, Dodge, Ram, and Chrysler in the U.S., as well as Fiat and Maserati in Europe. It saw its earnings cut nearly in half after a massive sales drop on both sides of the Atlantic. Stellantis CEO Carlos Tavares told Bloomberg Television the auto industry is facing a bumpy road that will last a few years. Asked whether he would spin off some of the company's brands to boost profits, he had this to say.
There is no taboo. There is absolutely no taboo. The brands are intangible assets that we respect. We believe that they are here to be leveraged.
Carlos Tavares, the CEO of Stellantis, and again, Stellantis stock trading lower. It is down now by 7.6%. A Colorado judge has temporarily halted the Kroger-Albertsons merger. Today we had that judge ruling, and shares of the companies are trading mixed. Kroger shares down 1.4%. Albertsons shares, they're up by just about 0.9%. And Southwest Airlines will begin offering assigned seats, ditching its free-for-all policy. We have shares of Southwest up by 6.2%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we are just under 5 minutes left in today's trading session, getting ready to wrap up the Thursday trade. What a different tone today, although I do feel like, you know how I sometimes say the market's tortured? Today feels like a tortured day.
Yeah, it does.
Do I go up? Do I go down? Oh, wait, I've got an important inflation read tomorrow that the Fed watches closely, and then I've got a Fed meeting next week.
Yeah, exactly. The Russ 2000, though, up 1.7%. We're seeing the rotation out of the mega cap and large cap stocks move into small caps. We're seeing that continue with the S&P down 0.4%. The Dow is in the green, but we're off our best levels of the day on the Dow.
Most read story on the Bloomberg in the past 8 hours, everybody. Here's the headline on it. Markets tear up. Markets tear up popular trades that reach stupid levels.
Maybe some people are in tears.
Tear, yeah. Yeah, right, exactly. Good point.
Thank you.
Thank you for that.
I was trying to save you.
Oh, that was a really sweet assist.
Thank you.
You know, good guy over here. The assumptions that have driven this year's global financial markets are being rapidly rethought. So we know what it is. Assumptions on Fed rate cuts, AI earnings have been upended. The results include a yen rally, a plunge in large cap tech stocks. So, yeah, but you know what? I would say we still have some big mega caps to get through. We'll see what
look, it's not just equities. I mean, copper and other industrial metals are also reversing a recent run-up. China's slowdown playing a role in their decline, along with the worries over the U.S. and tech. We're going to speak with Doug Krisner in a little less than an hour about a little bit about that.
Yeah, I do also wonder about some of the global central banks, different maybe monetary policies, how that kind of upends and kind of shakes up financial markets as well. What's the most read story in the past 60 minutes? It is. Looking, stock rotation is back in full force.
It's the market's wrap. It's the market's wrap. Hey, there's a New York Times story is the third most read. It's about Kamala Harris narrowing the gap against Trump. A new Times Siena poll found. It looks like now they're separated by a single percentage point among likely voters. This is in a survey taken after President Biden stepped aside. A survey of national voters, we should note, not a survey of swing state voters.
Which we know is so important. I'm waiting kind of for our team when they get that first survey out of some of the swing states. Having said that, we have a little bit over 100 days to go.
103.
Exactly. And so there's a lot that can happen. A lot will happen, no doubt about it. But as we've talked to so many different market guests or CEOs, they're watching certainly the elections. That's something they do think about. Maybe it doesn't change dramatically their strategy, but it's something they certainly are aware of and watching.
All right. The countdown is on, Carol.
You ready? All right, here we go, guys. We're heading over to our TV colleagues. The closing bell. It is starting right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu here to take you through the closing bells. Our global simulcast, it starts right now. Carol Masser and Tim Stenevec joining us in the radio booth. Alex Steele has the day off. Welcome to our audiences across all of our Bloomberg platforms, including our partnership on YouTube. That rotation, Carol Masser, into small caps, out of big caps to a certain extent, continues for yet another day.
Absolutely. Rotation, but I feel like we've been kind of back and forth, some hesitation in terms of certainly the S&P and NASDAQ in terms of what direction it wants to go. So I would say volatility continues to kind of be back in I feel like a big way. You've got the VIX going above 19 today. So I do feel like investors are kind of trying to search for what is the next big trend line.
And I was trying to go back. I don't think we've seen it this high almost all year long, right?
Right.
Yeah.
It feels like it's been a long time, right? Yeah.
It's interesting to see after yesterday, Romaine, I know you were out, but I don't know if you heard there was a major sell-off.
No, I did not
the S&P 500.
Oh, was it? Okay.
Yeah, so the rotation, but it wasn't a rotation into small caps. That's the thing. So that kind of took a pause, but the fact that it's back on, I mean, I don't know, was yesterday's sell-off a harbinger of things to come or just sort of a one-off?
You know, if you put it in context, yes, we extended yesterday's sell-off, but now the S&P 500 has fallen for 6 days in the last 7. You look at a chart and it's starting to look definitely like we've plateaued and maybe we have definitely reached that inflection point.
Yeah, and just a clarification too on the VIX, we did get above that 20 level back in April of this year here, but still at an 18. Yeah, but still at an 18 reading here. Some territory we haven't been in now for for about 3.5 to 4 months. We get the closing bells here in New York. A mixed day once again here with green on the screen. At least if you are in that small cap, mid cap, or cyclical space, the Dow Jones Industrial Average higher by more than 80 points, or about 0.2%. The S&P taking a leg lower, down about 0.5%. The Nasdaq also lower by about 0.9%. The Nasdaq 100 down more than 1. As for those cyclical names, Dow Transport's up 1.3%. The Russell 2000 up by a similar amount, 28 points, or about 1.3% on the day.
I might remind everybody, too, though, we're still up, I think more than 30% since that October low back in 2023. Having said that, Scarlett, today you've got 290 names in the S&P 500 gaining ground, 211 to the downside, 2 unchanged.
All right, let's take a look at the sector performances, because you'll see the heaviest weighted sectors doing the worst. You've got communications services down 1.9%, technology losing 1.2%, utilities, okay, not a heavily weighted sector, but down 0.9%. The ones bucking the decline, energy up 1.5%, industrials and financials and materials. So again, some of that cyclical flavor coming back. And just worth noting here, for the Russell 2000, all 11 sectors in the green.
Yeah, exactly. All right, guys, let's get to some of the individual gainers, if I may. ServiceNow, it is your number one gainer in the S&P 500. Stock up almost 14% here, jumping the most in more than 12 years. That was at least on an intraday basis. Got to check here at the close, reporting better than expected quarterly sales and bookings that signaled strong consumer demand for its broad suite of software tools. So that was certainly an outperformer. Old Dominion Freight finishing the day off its highs. It was up 8% at its highs, finishing the day just shy of 6%. It was the number 2 gainer in the NASDAQ 100. The trucking company reported earnings per share for the second quarter that did top the consensus estimates and a return to double-digit EPS growth. Analysts weighing in, several, including Raymond James, BMO Capital, raising their price targets on that stock. And real quickly, Hasbro was up more than 9%. A lot of stuff going on, I feel like, in the toy area, as we know. Up more than 9%.
Are toys back?
Our toys are back, but they're also, whether or not there might be some deal activity. We talked to the Mattel CEO yesterday and denied it. But nonetheless,
I feel like there's a little arc, right? The more they deny, the more it's true.
I don't know, but it's just kind of interesting. We tried to push. Hasbro, though, it did beat expectations the second quarter. Also boosted its earnings forecast for the full year.
Who pushed harder, you or Tim?
Carol did. I played good cop.
I know.
Oh, is that?
Yeah.
They have a strategy.
Well, I guess that makes sense. Yeah, Carol, bad cop. I get that. Okay.
Ouch. All right, I'm going to give it to the good cop now.
All right, but I get the decliners. Some really notable ones today. I do want to start with Ford. It's having its worst day since the depths of the financial crisis, going all the way back to 2008. Shares falling more than 18% today. A big earnings miss. The automaker blamed it on a surge in warranty repair costs for older vehicles. Recurring quality problems have driven up Ford's warranty costs for years, but an $800 million spike in the second quarter caught investors by surprise.
I'm totally fascinated. And I think you guys had the Ford CFO on yesterday or something.
You guys did, yeah. John Lawler.
Yeah, because I'm curious. I mean, this basically sounds like it's a Ford issue, like a production issue, right?
Yes.
Yeah, and a lot has been written about it. I think our own Keith Naughton had a big story about it a couple months ago. But he called it a one-time jump due to quality-related issues. But the market is not seeing this as a one-time thing. And this is not happening just at one time.
Yeah.
So.
I bought a car yesterday.
Oh, you did? Is that why you were off?
Yeah, I did. Yeah.
What'd you buy?
He was contributing to the U.S. economy.
What'd you buy?
A Bentley.
Oh, wow.
It was used.
That checks out.
It was used. Save a little money.
The maintenance costs, though, Romaine. Okay.
The insurance costs.
Yeah, we'll chat after the show.
Wait, I need insurance on that thing?
All right, let's talk Chipotle. Shares falling 1.85% on the day today. This after the company said it'll spend $50 million on making sure that workers serve the right amount of food. We're talking about 2 generous scoops of rice and 4 ounces of meat in those burritos and burrito bowls.
Bring it on.
You guys know there have been those complaints about portion sizes, right?
Yeah.
Wells Fargo analysts last month, they came out with this note. They said that Chipotle's portions varied widely after going to 75 different restaurants and getting identical burrito bowls in New York City. So the company's listening, and it's going to cost them. Shares of Lululemon falling to their lowest in more than 4 years after analysts raised fresh concerns about the company's ability to hit financial targets due to ongoing product execution and slowing activewear trends, falling 9% today. And finally, I do want to do an honorable mention with Edwards Life, down 31%. Biggest decline since 2000 when it fell 41%. Did you guys see this?
Yeah, huge deal.
Yeah, the maker of heart valves reported sales for the second quarter that missed the average analyst estimate. Also announced a couple acquisitions for $1.2 billion, but investors not liking it.
All right, we do have some earnings crossing the wire. Let's take a look at Norfolk Southern. The shares oscillating between gains and losses, though the company did beat on all of the major metrics. EPS in the most recent quarter coming in at $3.25 a share, a big beat over street estimates of $2.88. On an adjusted basis, it's $3.06 versus $2.87 on a revenue basis. This is where a lot of the optimism is right now. The company posting its first quarter of revenue growth in 5 quarters here and providing guidance for the full year of about 1 to 3% growth on the revenue side.
All right, we also have numbers out of Skechers USA. Second quarter EPS 91 cents. That is down from 98 cents a year earlier. Adjusted, it was 97 cents, and that does beat the average analyst estimates by 2 pennies. Net sales of $2.16 billion, weaker than expected. The consensus estimate was for almost $2.25 billion. So that might be why you're seeing the stock fall in after-hours trading. Also, just worth mentioning here, Skechers board has authorized a buyback program, $1 billion of its own shares.
Yeah, we'll see if that does anything to turn around the stock, but as you said, still down about 6% here in the aftermarket. Stock in 2024 just up 2.5% here, Tim.
Okay, we're going now to Deckers Outdoor, the company reporting numbers now. First quarter net sales coming in above estimates at $825.3 million, beating estimates of $807.8 million. Sees fiscal year gross margin of about 54%, saw about 53.5 to 54%. Our estimates were at 54%, so coming in line with expectations. Sees fiscal year operating margin at 19.5 to 20%, saw about 19.5%. Shares up in the after hours about 1%.
And it's interesting, too, because we talk about that GDP report that we got this morning, obviously a big bump in personal spending, and then at the same time, you're getting all of this commentary from companies saying that the consumer might be a little stretched, but then you look at these Deckers results, even the Skechers ones, I mean, this is pretty decent growth. I know it may not rise to the occasion for some people, but 22% for basically a shoemaker on a quarter-to-quarter basis. That's pretty impressive. And then again, you overlay that with what you were talking about, Carol, with Old Dominion, and even the results we got out of Norfolk Southern right now. There's some bright spots here in this economy.
It really depends on what you're selling. I think in the case of Deckers, they have been able to not cut their prices, not discount their wares. So there's full price selling going on, and this is something that was expected. And in fact, the incoming CEO talking about how fiscal year 2025, because this is the fiscal first quarter, is off to a great start. Hoka and UGG delivering fantastic first quarter results, contributing to the increased outlook for the full year.
And the Santa, is their strategy just like to have ugly shoes? Is that it?
That's Deckers, right?
Yeah.
Did you know that I'm wearing Hokas right now? Is that
I
what
did
you're
not,
saying?
but they are ugly.
Are they
I haven't seen them.
About my shoes.
And you have Uggs. I know that's a fan favorite of Scarlett's, right?
Yep.
Teva, Sanuk.
So rude.
Yeah, Kookaburra. Oh, okay, there we go. Sorry.
This shows consumers are still spending, right? Go back to the...
Did you just call me rude?
Which one?
You're insulting his footwear.
I didn't hear
It's
anything.
fair.
I didn't hear anything.
No, but it shows, right? Goes back to that GDP report. Consumers are still spending. We should point out that's backwards looking. Let's see what happens, whether or not that continues. But always so important, right, in terms of our economy. So I bet...
$8.80 a share on Deckers right now.
I bet Romaine has Uggs at home.
I do not have Uggs at home.
Uggs, I bet like those platform Uggs.
There
that
are
just
no
came
Uggs
out.
in my household.
I believe there are no Uggs.
There's
no
some
Uggs
Crocs
allowed
in our household.
No Uggs allowed in the Bentley.
Yeah, so exactly.
I think
no shoes in the Bentley. I got that nice plush white carpet. Can't be messing that up.
All right, on that's a wrap, guys. Our cross-platform coverage on radio, TV, YouTube, Bloomberg Originals.
You think Romaine will let me be the driver? like I can drive him around in the
you can
Bentley?
At least polish it a little bit.
No Hokas allowed in there.
No, indeed.
Okay.
All right, guys, we'll see you tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I think it's fair to say, Carol, that a lot of consumers' experience with the supply chain comes from when you can't get something.
Absolutely.
Right? They're like, oh, wait, this is going to take 8 weeks to get. Now I'm interested in supply chains.
We all just assume it just shows up.
Yeah, it's
right?
like during the great supply chain crunch that happened during COVID. As we know, though, now supply chains are incredibly complex and they're incredibly fragile.
Yeah, our next guest wants to modernize a specific part of the supply chain, material flow, the moving of raw materials and other components before they become things, or those things that we all love to buy. And that's what he's doing. It's all happening at a company known as Mitra.
It's a startup that's raised $78 million. It's backed by companies including the food and drug retailer Albertsons. Chris Walty is co-founder and CEO at Mitra, and he joins us from Oregon. Chris, welcome. You've got a really interesting.
Thanks for having me.
Yeah, you've got a really interesting career so far. 7 years, more than 7 years at Tesla before launching Mitra. You worked in mobile robotics. You ultimately worked for the Optimus humanoid robot. During that time, what was the problem that you identified when you were at Tesla that you built Mitra to solve?
Absolutely. Yeah, so leading the material flow specifically to help Model 3 off the production line, as you may have known, Elon called it production hell.
Oh, yeah.
He
was sleeping on the floor of the factory.
Yes, I think I tripped over him a few times myself. It truly was challenging. It was a multi-month, multi-year effort to really get that spun up. And one of the most common activities throughout the process, the one that I was ultimately put in charge of because it was falling behind, was simply getting parts to the Model 3 assembly line. Moving and storing material within the factory was a huge challenge.
Okay, so wait, so hold on. Let's understand this. Your job was to get the parts. They would come in from their suppliers, or they would be fabricated there, and they would be stored in a certain area. And your job was to facilitate the transportation of those from wherever they were in the factory to the actual supply chain where it'd be assembled?
Exactly. Yep. Just, think pallets, move it from pallets down to kind of cases and totes, breaking those apart, and then using things like conveyors and elevators to get them to exactly where they needed to be on the line.
How does this not already happen?
Well, it happens today. In many factories, it happens through a lot of manual processes. In fact, 40% of the labor in any manufacturing facility is really just moving things around. And that number increases to about 80% in a warehouse. And most of that is done the way it was 75 years ago today, through forklifts or people moving things manually.
So what's the way that you can solve this and bring this up into the 21st century?
Absolutely. So the goal of our company is to develop the simplest mechanism possible to do the most amount of work, and that is simply moving material up to 3,000 pounds. And when you think of a factory or warehouse, it's a large volumetric open space. I think everyone's been in a Costco before, right? You imagine just that lots of airspace with racks and pallets, and a lot of that doesn't really require the sophistication and horsepower of a person to do a lot of that challenge.
Amazon bought this company years ago, Kiva Systems. Is it
right?
Are you building something like if that's the image that people have in their head of how something moves across a warehouse floor? Explain in the context of that. Like use that as the reference point. How is your solution different?
Certainly. Yeah, Kiva is a phenomenal system. It's really been beneficial to Amazon. What Kiva is really good at doing is bringing a lot of smaller bins, parts to a particular area so that someone can pack it and put it in a parcel that is sent to probably your doorstep the next day. That said, in the supply chain, most of what moves around in the supply chain moves around on pallets. You look around, everything you see around you has probably been on a pallet at some point or another. That's not really, Kiva's bread and butter. It's not really designed for what's called parcel fulfillment. Most of the supply chain needs pallets, right? Our first customer, Albertsons, they run on pallets. Most industry runs on pallets. And so that's what we're moving around, and we're doing it in an extremely simple and efficient way using mobile robots that move in any direction.
And it seems like your systems, in terms of how they fit together, it's very simple, right? It's not a lot of moving parts to that.
No, that was it almost killed the company at Tesla. The amount of moving parts, the amount of things you had to plug in, commission, all of the motors, all of the sensors at the scale of a warehouse, it's really challenging. And if you want to do full automation for these buildings today, that's kind of the state of the art. And that was what one of our biggest struggles at the company was. Led a team thereafter to try to build mobile robots to solve that problem at scale within Tesla. And now we're trying to do that for the rest of the industry in much more of a greenfield approach effectively.
Chris, you mentioned working with Albertsons. Who else are you working with? Give us an idea of kind of the different types of companies that you are working with, or planning to work with, or hope to work with.
Certainly. Well, as I mentioned, every supply chain runs on pallets. I mean, every industry from consumer packaged goods to retail, pharmaceuticals, of course, automotive, home goods. Any of those folks can benefit from our system at some point in their supply chain. So The folks that we're working with are, Fortune 100 companies that have significant scale to apply this throughout their ecosystem.
What type of investment does a company have to make if they want to integrate Mitra into their supply chain? Because I'm looking at the website. Carol and I were looking at it earlier in the day today as we were preparing for this. It's really, really cool, but it also looks like it's a big investment.
Sure. And that's one of the biggest challenges, right? I mean, if you're a supply chain company and it's challenging to know what does your business look like 5, 10, even 15 years from now, investing in a lot of these fixed automation systems like, we had to put in a Tesla could be a bit challenging. And so what we've designed is a system that effectively, regardless of what your system needs to do 5, 10 years from now, can flex, can change through software. From a cost perspective, our North Star was, look, 95% of these warehouses operate on pallet racks and forklifts. This has to be as easy to install and effectively as cost effective as a pallet rack and a forklift. So that is effectively our North Star. That's what we're driving towards. And you do that through a very, very simple system, orders of magnitude more simple than the kind of fixed automation that's out there today. And so that's our North Star.
Chris, I want one of these for my basement, basically. No, like you look
How
at
do you
this.
get it? How do you then you get it to the main floor? You got to.
But it's this idea of like, what you do in a basement with those metal shelvings and you try to like have it all organized. It's like this on steroids. And I understand it's a much more sophisticated system. Having said that, I think we're trying to get like, what does this cost a company to do? And I understand this is one of those things that probably over time, but how expensive is a system like this?
Certainly. So, when you look at on a cost per pallet position or a cost per pallet stored, right? This is, our North Star is pretty equivalent to what you would need to spend to outfit your warehouse with, call it single deep pallet racking, which is, today those can be, $100 to, $700 a position. It's a pretty wide range, and a lot of it depends on, are you in an earthquake zone? Are you in an area with hurricanes, et cetera. So it really, the vast majority of the fixed infrastructure is just in a very simple steel rack. And it's a pretty really, it's just the cost of steel effectively.
It's a pretty cool system.
Very, very cool.
Yeah. Highly recommend everybody check it out on the website. Well, keep in touch and let us know how things are going as you continue to build it out. Like, fascinating background and certainly interesting to see what you guys are up to. Chris, thank you so much.
Chris Walty, really appreciate you joining us. Co-founder and CEO at Mitra, joining us from Oregon. Coming up next, Carol, we're going to speak with Dr. Tessa West, professor of psychology at NYU. We're going to talk about finding work that works for you.
Yeah, it's really interesting, and I'm curious. I have a ton of questions for her about, when do you look for a new job? Why do you do it? I don't know. So we'll get into it. That's coming up. I'm not looking. I'm pretty happy. This is
happy.
Bloomberg. I'm happy.
therapy.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a mixed Thursday. Dow Industrials did finish higher. S&P, NASDAQ, both in the red today, with the S&P ending the session at 53.99, down 27. A drop today of 0.5%. The Dow did hold on to an 81-point gain, up 0.2%. Another down day for the NASDAQ Composite Index, tumbling another 160 points, down 0.9%. The Russell 2000, though, remaining bright spot for the market, up today by 1.3%. 10-year yield 4.24%, with a 2-year at 4.43%. Spot gold down $37 the ounce to $23.59, down 1.6%. And West Texas Intermediate crude up 0.7%, 78.17 a barrel. A renewed sell-off in the world's largest tech companies dragged down the stock market, overshadowing economic data this morning that bolstered confidence that the Fed will be able to engineer a soft landing. Ford shares had their worst drop since 2008 after a big earnings miss that the automaker blames on a surge in warranty repair costs for older vehicles. Ford today lower by 18.4%. Briefly, video game voice actors are going to be going on strike beginning at 12:01 after failing to come to an agreement over the use of artificial intelligence in the industry. They're represented by the Screen Actors Guild. On a major IPO today, Lineage, it is the temperature-controlled storage and logistics giant. First day out, shares up by 3.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, earlier this month, we had some data out showing that companies are posting fewer job openings this year and employees are quitting less as unemployment has begun creeping up from low levels, signaling the end of the historically tight labor conditions that characterize the rapid recovery from the pandemic shock. We talked a little bit about some of the softness earlier with Michael McKenzie and Michael McKee about the labor market, what we're seeing.
Well, our next guest has a take on the labor market, specifically on jobs and finding a job that is fulfilling. Let's get to Dr. Tessa West, professor of psychology at NYU. Her new book is Job Therapy, Finding Work That Works for You. Dr. West joins us from New York City.
Dr. West, great to have you here on Bloomberg Business Week. Why write this book?
People are miserable at work, and quite honestly, they have no idea why. I think, if you ask people, why don't you like your job anymore? What's changed since the pandemic? They'll come up with a ton of little reasons, but they're actually really struggling to come up with the reason, and more importantly, what it would take to make them happy at work. So this book is really about finding answers to that deep question.
Is liking a job generational? And the reason I ask is because I remember early on in my career.
This is going to be fun.
Looking for a job that I would tell people that I wanted to find a job. This was before I was, like when I was in college, I think. Like I wanted to, find a job that I liked. And previous generations, earlier generations would say to me, it's a job. It's not supposed to be fun. It's a job. This is work. Is it like a millennial thing that we're supposed to like our jobs?
Millennial, Gen Z, I think younger generations, they don't necessarily just want to like their jobs. They don't want to feel miserable at work. They don't want to have high blood pressure from their jobs. They don't want to get, all these kinds of pre-existing health conditions from work. So I think the discourse around what your job can actually do to you and how it can affect your health has definitely changed with younger generations, where they're not just looking for purpose, but they're looking for jobs that are not going to actually stress them out as much as I think the older generations, who are kind of just much more accepting of feeling miserable at work and then leaving it at work when they went home at the end of the day.
All right, so wait, there's totally not liking your job, and then there's being stressed at your job. I love my job, but I definitely have days where I'm stressed. So, are you telling about people who are like in a job and they're like, I hate every minute of it? Is that what we're talking about?
I think both are true. So what's fascinating is I think there's a whole category of people who are highly identified with their jobs. Their jobs define who they are. So good days make them feel good about themselves as a person. Bad days, the opposite. But they actually hate that. They are high on what we call kind of identity centrality at work, my work defines me, but low on satisfaction. I hate the thing that defines me. And I think that's the dangerous category to be in, is to feel like something kind of owns you, but you don't like it at the same time, and you don't know how to get out of it. You don't know how to break that cycle.
Okay, are you saying, like, if somebody doesn't like their job, the first reaction, if they told someone that, would be, get another job. But you actually argue that there are some tools that you can use to stay at your current job, but do like your job more. How do you do it?
I think the tendency to kind of just want to jump from job to job isn't getting us anywhere. I think you need to first kind of understand why you dislike it. What is the psychological source of your unhappiness? And in the same way you would evaluate a marriage that's going wrong, you would think to yourself, okay, what's up? Is it that we aren't communicating? Am I not getting feedback? Have I drifted apart? Do I no longer recognize you? Am I having an identity crisis? What's the kind of deep underlying meaning behind those feelings? And you need to understand those before you can improve your current job, or before you can even start kind of networking to figure out what you want next. And that's the step that most of us actually skip in this kind of job hunting process.
That seems crucial, right? You don't just, you're unhappy, just leave. You've got to figure out what is it that makes you unhappy, because you might actually like where you are, but just not the particular job that you're in. All right, so give us a checklist. I'm just thinking people are listening and they're like, okay, so that sounds like it's number one. If you're not happy, figure out why you're not happy.
Yeah, dig deep. There's a couple of quizzes I give you in this book. You can start by figuring out how strongly you identify with this career. If you still want this to be part of who you are, if you want it to define you, then what are those steps you're going to need to take to actually figure out why you're not getting ahead, why you can't get promoted, why people aren't communicating with you. And I think one kind of crucial part of this is taking a look in the mirror and actually asking yourself critical questions like, am I taking on roles and responsibilities that maybe make me known to the boss, make me visible at work, but aren't actually helping me get ahead? Little communication gaps can be closed, like, was I promised a job that wasn't delivered to me? At what stage was that promise made? Where was that miscommunication kind of coming from? Did it start at the hiring stage, onboarding, later on? Really kind of figuring out in that timeline of your career, those problems started to occur, and how much of that is for you to blame and how much of that is your career. Really treating your career as a relationship partner that you can kind of negotiate with to figure out what those things are.
What happens if you're in a position where you have a manager that you feel is holding you back? How do you address that?
I love that question. A lot of people can't get ahead because they have managers who love them, but who don't have the social status and power to actually get ahead. You need to network with other higher status people at work, and I like to kind of go up and adjacent. So talking to other managers, even outside of your immediate team, even outside of your function, to find out how much social capital your manager actually has. If they want to promote you, how much voice do they have in those rooms where those decisions are being made? And you can ask very critical questions during performance feedback, during interviews around what is the process through which people are promoted here? How long do they need to work here? How critical is it that their manager, has the social capital to make those things actually happen for them? Early on in that process, before you get to the point where you're realizing, I have a manager who loves me and wants to promote me, but they have zero ability to do so.
In this environment, I feel like, or I feel like for years, people have said, it's great when you can do multiple things. That's a good thing. You take on more and more responsibility, more roles. Is that a good or bad thing, you think, in terms?
I think it's a very dangerous thing.
Why?
Yeah, I think because we are in a kind of movement of busyness right now. We think more is better, and a lot of managers are asking us to do this instead of getting really good at a handful of roles and tasks. We are spread too thin. We are taking on multiple things that don't add up to a path towards promotion or towards a raise, and we end up having resumes that look like we are all over the place. And one of the main criticisms I've heard from hiring managers is people have those resumes that say, 2022 through present, 2023 through present, 14 times in a row on their resume, and it really looks like they have no idea what direction they're going in. They just say yes to everything in an attempt to get ahead. So you have to exercise some restraint when it comes to taking on these roles, and understand how these roles can actually build on one another to help you climb up instead of just spreading you out in a million different directions.
Okay, so one thing that we like to talk about is lessons not just for people who are employees, but and who are targeted in the book, like don't necessarily like their jobs. What about lessons for managers who may have employees who aren't feeling like they're fulfilled at work? What lessons for managers can be taken away from the book?
I think one of the more surprising things I learned in research for this book is that the signs that people are struggling, that they're having an identity crisis, that they're spread too thin, that they're drifting apart, are often the opposite of what we're trained to see. We're trained to look for disengagement, quiet quitting, but often those early signs are actually the opposite. When people are struggling with their identity, they're actually thinking of taking on a new career, they go all in at work. They take on more, they show up later. It's like an extinction burst. It's a little like when you're married and you go on a million dates right before you get a divorce to prove to yourself that you did everything you could. So managers actually need to learn to look out for some of those warning signs that I talk about that are often kind of things that are not in the zeitgeist. We're not talking about being really engaged when you're questioning your job or being sensitive to intermittent reinforcement or being on an emotional roller coaster, those kinds of things.
Interesting. One of our fans of our show said, the most recent grads over 4 years have only known a bull market in hiring and hoarding of employees. So how do you deal with the stress of life once that cycle turns and we see unemployment tick up? I mean, Dr. West just got about 25 seconds. I mean, this has been a tight market. How does this stuff change when it's not so easy to leave a job? Just quickly, very quickly.
You really have to be ready to ride that roller coaster. Don't read too much into one emotion that you're feeling. And whatever you do, don't chase a job just because of the compensation package that comes along with it. Those things go up and down constantly. That shouldn't be your primary motivator.
All right, gonna leave it there. Dr. Tessa West, professor of psychology at NYU. Her new book, Job Therapy, Finding Work That Works for You. That fan of the show also says you might like your job, but not your co-host. Cough, cough.
Wow. No wonder I didn't get
Who's a fan of yours?
No wonder I didn't get an IB. Let's get to world and national news. We're a fan of Amy Morris. She's in the Bloomberg 901 newsroom. Hey, Amy.
Hey, Tim, I'm a fan of yours, too. Israeli Prime Minister Benjamin Netanyahu visited the White House to discuss the war in Gaza with President Biden and Vice President Kamala Harris.
A proud Jewish Zionist to a proud Irish-American Zionist. I want to thank you for 50 years of public service and 50 years of support for the state of Israel.
Biden aiming to get Israel and Hamas to seal a U.S.-backed proposal to release hostages in Gaza over 3 phases as a legacy-affirming achievement. White House officials say the negotiations are in the closing stages, but there is more work to do. White House National Security Communications Advisor John Kirby says the vice president's meeting with Israel's leader is not unusual.
Vice President has, and I fully expect over the next 6 months, will continue to have meetings of her own with foreign leaders. She's met privately with President Zelensky as well and others.
Kirby says President Biden and his team will be busy for the remainder of his term. House Republicans are condemning Vice President Harris for her management of the southern border. That resolution condemning Harris as the Biden administration's border czar passed with support from 6 Democrats. Biden in 2021 selected Harris to lead the administration's efforts to address the root causes of migration. President Biden has also signed into law a bill strengthening oversight of Federal Bureau of Prisons. The Federal Prison Oversight Act establishes an independent ombudsman to field and investigate complaints in the wake of sexual assaults and other criminal misconduct by staff, chronic understaffing, escapes, and high-profile deaths. It also requires the Justice Department's Inspector General conduct risk-based inspections of all 122 facilities. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morrison. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a mixed Thursday. The Dow higher, S&P, NASDAQ both ended in the red. A renewed sell-off in the world's largest tech companies dragged down the stock market again, overshadowing this morning's economic data that bolstered confidence that the Fed will be able to engineer a soft landing. The NASDAQ 100 index down 1.1%. The composite index, NASDAQ composite, down 0.9%. S&P down 27. Choppy session fell 0.5%. A lot of that selling coming in the final hour of trading. The Dow, though, held on to an 81-point gain, up 0.2%. And the Russell 2000 index of small cap shares, again the outperformer, up by 1.3%. The 10-year, 4.24%. The 2-year, 4.43%. Gold down $33 the ounce to $23.63, a drop of 1.4%. West Texas Intermediate crude up 0.8%, $78.17 a barrel. So where to buy in this market? Kathy Entwistle is Managing Director at Morgan Stanley Private Wealth Management, and she was a guest right here on Bloomberg Business Week.
So there are areas of the stock market where we think there are still opportunities to get some good value, and those would be areas like small stocks or international, global. The U.S. markets are just overpriced right now, and clearly we have, the Magnificent Seven that's caused a lot of that, but there's other companies overpriced too.
Kathy Entwistle of Morgan Stanley, and again, she alluded to the small cap shares. Russell 2000 worth repeating, up by 1.3%. So again, recapping, turned out to be a mixed day. The Dow higher, S&P, NASDAQ both ended in the red. A 0.9% drop for the NASDAQ Composite Index. To put that in context, S&P down 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, you're going to thank us for this segment in a big way. Skin cancer. My own family having their own scare recently around this. Many of my extended family have dealt with these concerns. I'm big, I got to say, Tim, on those full body checks. Do it every year.
I got one on Tuesday morning.
You did.
So to get aware for the summer and summer sunning season, with us is Ashani Weratna, chair of the Biochemistry and Molecular Biology Department at the Johns Hopkins Bloomberg School of Public Health. The Bloomberg School of Public Health at Johns Hopkins University is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Ashani, welcome. We got lots and lots of questions for you, so we're so glad to have you with us. I do want to start with sunscreen, though, because we know we're supposed to wear sunscreen every day, regardless of how much time we spend outside. But one thing I don't understand is it okay to wear chemical sunscreens, or should we move completely away from chemical sunscreens and instead use sunscreens with metals in them, like zinc?
That's a great question, and it's a question that a lot of people have concerns about. The truth is that there's no real evidence showing that the chemical sunscreens are dangerous for your health. And what I advise people to do is, if they are really concerned about it, there are so many great lines of UPF clothing that are available now, including long sleeve t-shirts, hats, and that sort of thing. And as you just mentioned, the zinc oxide based sunscreens are fantastic. So I don't think there's a need to move away from chemical sunscreens because, again, there's no hard evidence that they are dangerous. However, I do think it's important to have other options.
Yeah, I mean, certainly the hats and the long sleeves. You should see me at the beach. I'm no fun to go to the beach with because I just stay under an umbrella and with like long sleeves on the whole time, and I'm grumpy.
Well, you get a gold star from me.
But we do have to put sunblock on our face and on our nose. Like, do you recommend a zinc sunscreen over a chemical sunscreen, or we're not at that point?
I honestly do not, because I use chemical sunscreens myself and on my children, and I don't see a need to switch. However, again, if someone is concerned, obviously we have great zinc oxide sunscreens.
What about, though, kind of, like, I'm someone who's embraced kind of the more natural or non-chemical things. They seem to work as well, do they? Or like, what's some advice in terms of how we should pick a sunscreen, whether we, aren't so worried about the chemicals in there, or, is there some way of kind of filtering through?
Sure. So the most important, speaking of filtering, the most important thing for a sunscreen is to make sure that it is a broad spectrum sunscreen. It needs to be able to block both UVA rays and UVB rays. So those are two different kinds of UV rays. They penetrate different layers of the skin, and it's really, really important to block both of those. So wherever you are looking for a sunscreen, no matter if it is, natural based, chemical based, physically based, make sure it says that it's a broad spectrum sunscreen. I would also stick with the sunscreens that are FDA regulated because they are safe and they have been tested to do what they're supposed to.
How do you know if a sunscreen is FDA regulated?
It will usually say it.
It'll say it on it. What about SPF 10, SPF 30, SPF 1,000,000? Is there a point where it's just ridiculous?
Yeah, so actually, we recommend anything that is SPF 30 is probably just fine. You'll see SPF 50, SPF 70. All that means is that you can stay out longer in the sun without reapplying. But the truth is SPF 30 is probably, at this point in time, SPF 30 is a completely comfortable SPF factor with which to stick if you're interested in.
But if you're really fair, would you suggest that you go for a higher SPF?
So, no, because the higher SPF you go, it's not a linear increase, if you will, in protection. So my advice would be rather than go for an SPF 70, buy an SPF 30, but reapply more often and consistently. We suggest that you reapply, especially if you're sweating or swimming, at least every 80 to 90 minutes when you're out in the sun, which I don't think most people do because I have so many people say, oh, we put our sunblock on, but we still got burned. And then I ask them, did you reapply? And often they say no.
This is a real question. I'm not just asking this because this is what I deal with every morning. But truly, why is it so difficult to put sunscreen on kids? And what are some good strategies to get kids not to scream at you when you're trying to put sunscreen on them?
Honestly, it is a challenge. I remember when my daughter was in kindergarten, I got all the kids to the point in her class where they would just line up in front of me and I would cover them with sun.
Can you come over tomorrow morning?
What's that?
Can you come over tomorrow morning?
Yeah, absolutely. I'll be there.
Yeah, good.
So again, with kids, there's these great lines of the SPF clothing, and that is a lot easier. But unfortunately, as with everything, getting them to eat, getting them to wear their sunscreen, it's just a struggle. And I wish I had a better answer for you.
Having said that, I actually had a pediatrician who was like, back off the sunscreen a little bit because kids were being so covered in sunscreen. Concerns about was it vitamin D, not getting sunscreen.
Okay, I want to hear the answer to this.
Yeah.
Okay.
Yeah. So
sure. So the truth is that to get the amount of vitamin D that you need for your body to function properly, you only need 15 minutes in sunlight. And often we get that 15 minutes even if we're wearing sunscreen because nobody's going to reapply at the exact second they need to reapply. And so if you're out in the sun at all, you're getting the sunlight that you need to make the vitamin D. So it's a little bit of a flawed argument to say don't use sunscreen because you won't get vitamin D. More of a concern is don't let your kids sit in the basement playing video games because then they definitely won't get their vitamin D.
And I will say the caveat was, basically put it on when it's like supreme sun hours, like the peak hours, but you can, there could be hours a day where they're not slathered in sunscreen.
Okay, do Carol and I really have to put on sunblock every single morning when we leave our homes to come to the office, even in the dead of winter?
I've got pretty thick makeup on. That's not going to do it?
So I actually have makeup that has an SPF 15 in it, and that's what I use. And, when you're sitting inside an office all day or, as you say, we get significant sun exposure even in the winter. And if you are someone who skis, for example, that is, you actually get a double exposure of the sun because if you're on the slopes, the sun bounces off the snow and 80% of it reflects back on you.
Water.
Right. And just to your earlier point, the peak sun hours are between 10 and 4.
Oh, okay. Good to know. Good to know. Ashani, thank you so much. She's chair of the Biochemistry and Molecular Biology Department at the Johns Hopkins Bloomberg School of Public Health.
Ashani, we are at over the Johns Hopkins Bloomberg School of Public Health. It is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. An important labor ruling out of California. Uber, Lyft, and DoorDash can keep classifying California drivers as independent contractors after the state's top court said a company-backed law passed by voters does not wrongly curtail the legislature's power over worker protections. The ruling upholds California's Proposition 22, and it was unanimous. Uber down today by 0.6%. Crosstown rival Lyft down 1.4%. DoorDash today was down by 1.6%. Ford had its worst drop since 2008 after a big earnings miss that the automaker blames on a surge in warranty repair costs for older vehicles. Recurring quality problems have driven up Ford's warranty costs for years, but an $800 million spike in the second quarter caught investors by surprise. Shares of auto giant Stellantis dropped today. Stellantis was down 7.7%. It is the maker of Jeep, Dodge, Ram, and Chrysler in the U.S. It had a massive sales drop on both sides of the Atlantic, and we spoke with the CEO, Carlos Tavares.
The market is in a turmoil. It is true that the transition that we are going through is immensely challenging, and this is a bump. There will be other bumps. This will last for a few years. This is not a short-term turmoil. And the most resilient, the most focused, the most customer-focused will survive.
And he was asked whether he would unload any of the company's brands to boost profits. Tavares said there, quote, are no taboos. Carlos Tavares of Stellantis was a guest on Bloomberg's Surveillance. Again, today, shares of Stellantis down by 7.7%. And those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Tim and I getting ready to wrap up the Thursday edition of Bloomberg Business Week Live here.
This is your Friday and Doug Krisner's Friday,
Doug
too.
and I'm taking a couple of days off.
What are you going to be doing? Do you know?
I don't know. Knitting some socks or something. Getting ready for winter because it's already August, which is kind of crazy. I don't know. Coming your way, did we get another interest rate move out of China?
Yeah, there was another rate cut that was kind of surprising last night.
What's up?
Well, they're trying to keep the economy from cratering, I think, you know, particularly on the domestic demand. We were talking the other day about, and I think a number of guests on the show have made this point, that it appears as the housing market may be putting in a bottom. I mean, the descent in terms of the prices, the home prices, has kind of stabilized a bit.
That would be some good news.
Well, we may move laterally for some time. I don't think there's still a lot of enthusiasm to jump into real estate, but this the move lower, I think, in a lot of the prices seems to have stabilized.
A bottom in that, right?
Yeah, perhaps.
Would be some progress, perhaps, right?
Yeah,
Of not getting worse anymore.
Yeah.
Why surprise cut, though?
I don't think that the market has been of the opinion that the PBOC was going to move very quickly, and they've done now the loan prime rate cuts. We had the 1-year MLF cut earlier in the week, and now these rate cuts. I think that the market was of the opinion that they were going to really wait until the Fed did what it needed to do, because you've got to be very careful about the interest rate differential. You don't want to have a lot of capital moving outside of China.
I keep thinking about the differences, right, of global central banks.
Right.
Yeah.
Certainly that's a consideration.
Hey, one thing I got on my radar, no pun intended, is that the U.S. has seen its first Russia-China joint bomber
Did you see that off the coast of Alaska?
Yeah. This is pretty interesting. The Defense Secretary, Lloyd Austin, said that it's not a surprise to us.
Maybe it's just because we're in a political season right now, and they're going to take advantage of maybe a little bit of. I really don't know. I don't know why Austin is saying it's a surprise. The timing. I think that the NORAD, right? That was the monitoring agency that kind of picked up on this. The degree to which it is a big surprise, I think, we're on high alert always for this type, particularly when you get to that part of the globe, where you're right at. I think, what did Sarah Palin say?
Yeah, she can see Russia from her.
There you go.
Yeah.
That's all you got to know.
Nicely done.
You know, Doug, I was thinking of the same thing when you were talking about that.
Yeah, didn't SNL do a few skits off of that or something?
So what did you guys talk about today? What should we know about with the U.S. trading day and how that may influence what we'll see in Asia later. More tech weakness, is that what you're seeing? More rotation?
No, if anything, I mean, the VIX moved up, I think above 19. We haven't seen that since April. So it was kind of interesting. I feel like the market, there was a churn back and forth. It certainly wasn't the selling we saw yesterday. That U.S. GDP report this morning, even though it's backward looking, right, showed businesses are spending, consumers are spending, growth came in stronger than expected.
Soft landing? Are you guys talking about that?
A lot of conversations about soft landing.
Yeah, quite a few today. I think also interesting was the way that we saw the sort of a return to the rotation that we've talked about and the move into small caps, as you were mentioning.
Economically sensitive stocks.
Yeah, it was like a difference from yesterday, what we saw. Because yesterday, you know, there's some
folks
folks out saying yesterday was the beginning of some sort of bear market.
Does it change the thinking on the Fed? I mean, we've got a meeting next week. We've got the PCE, the monthly data tomorrow.
Mike, not really.
No.
Yeah,
It's all about September,
answer we
it
got
feels
from
like,
Mike and
at this
Mike and
point.
Mike earlier today.
Mike and Mike. We had a lot of,
Mike and Mike.
Yeah, we had 3 Michaels on our show today.
Two rate cuts? Is that what they're saying?
Two rate cuts, 3 Michaels.
Yeah.
Yeah.
2 rate cuts.
Yeah.
Give or take a little bit.
Yeah.
I think that, you know, the point is right now, it makes sense for the Fed to wait till September, but there's a lot of information before we get to that meeting, right? You think about from here, right? The July meeting next week, and then you've got all of August, and then you've got a little bit of September before they make a decision.
And then
it
gets tricky around the election, right? You don't want to be kind of seen as being, you know, putting your thumb on the scale, so to speak, right? If you're Jay Powell and company, you want to try to remain as neutral as possible. But if it's necessary, I think that they've got no choice.
And there's some worry about the weakness in the labor market if that starts to pick up.
Yeah, but
although
weekly jobless claims this morning, right?
I know. So the Fed has some room. Hey, we got to go.
Have a great weekend, Carol.
See you.
Thank you. Balance of Power starts now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew.
President Biden meets with Israeli Prime Minister Benjamin Netanyahu at the White House, just a day after addressing the American people from the Oval Office to explain his decision to drop out of the race.
We're joined today by Democratic Congressman Sean Casten of Chicago on the changing of the guard in his party and the Democratic convention about to take place in his city.
And we'll talk with Hagar Shamali, CEO of Greenwich Media Strategies, about Netanyahu's meetings with Joe Biden, Kamala Harris, and Donald Trump, and the chances of a ceasefire in Gaza. So obviously it's been another busy day in Washington as we've seen a succession of meetings now with the Israeli prime minister and leaders. First, he met with Biden. They met together with hostage families as well at the White House. And now it's the vice president's turn after she decided not to preside over his address to a joint session of Congress yesterday, although they say it's because she had a pre-scheduled event.
That's correct, but another fly-on-the-wall moment, I suspect. They did let the pool, I should say, into the room in the Oval Office, the press pool, for a little bit of a sense of what they were talking about. I don't think that'll be the case when Netanyahu goes to Mar-a-Lago tomorrow. But we have to remember that in that Oval Office, it was only hours earlier that the president addressed the American people on his decision to drop out of the race.
Yep, talking about preservation of democracy, how he needed to pass the torch, and of course, that torch being passed to his vice president, Kamala Harris, who he endorsed again in that speech last night. And she's been on the campaign trail herself before she meets with Netanyahu this afternoon. She was actually in Texas addressing a number of union workers, the American Federation of Teachers, and she also was asked by the press pool about whether or not she's planning to debate Donald Trump.
Many of you have been asking me about the debate, and I'll tell you, I'm ready to debate Donald Trump. I have agreed to the previously agreed upon September 10th debate. He agreed to that previously. Now it appears he's backpedaling, but I'm ready. And I think the voters deserve to see the split screen that exists in this race on a debate stage. And so I'm ready. Let's go.
Ready? Let's go. With Bloomberg White House editor Michelle Jamrisco at the table. Michelle, it's great to see you. Are we to believe this will really happen? To Kamala Harris's point, Donald Trump was suggesting that he might not want to use this venue or the moderator that was already agreed to here.
That's right. It's been a real tango, Joe, both at the presidential level and the VP level on deciding how this debate will come together and if it will come together and who will host it. But as you heard from Kamala right there, they've been eager to kind of lock this in. I'm just thinking back today to a few weeks ago before the Biden dropout when she was angling for the VP debate. And she was pressuring the Vance team and others to kind of lock in that date. And their response, kind of snide but clever, was, well, we'll let you know when we decide, when we hear who your VP is, because they were already kind of pushing this line that Biden will eventually drop out and Kamala will be the nominee, which in fact here we are, but it kind of takes both of them by, a little bit of surprise, and they both have to kind of make these pivots. So that is among the things up in the air. I understand the Trump campaign is pushing for a Fox-hosted debate. We'll see if those terms are agreed upon or if they can find some middle ground there.
Of course, when the visit by Israeli Prime Minister Benjamin Netanyahu to the U.S. was scheduled, we too thought he would be meeting with someone who was still leading the Democratic ticket in President Biden. Instead, he's meeting separately with the vice president after meeting with Biden earlier today. What do we know about what came out of that meeting? Knowing Joe Biden in his speech last night said one of the things he wants to accomplish with his remaining time in office is a ceasefire in Gaza.
Well, we don't know much with 100% certainty because they don't want to, per usual, read out the specifics, especially of the ceasefire deal. They've been very kind of more in general terms about what's agreed upon, what they're trying to get Israel to kind of step over the line and say, yes, the ceasefire framework works, but the details are not being revealed. We heard from the families of hostages who met with both Netanyahu and Biden also after that Oval Office meeting, saying, we heard some things that we can't relate to you on the details. However, we share the optimism that we're closer than we have been before. So we don't know much about the substance there. But what we do know is that Biden continues to kind of emphasize, I've had this long history of pro-Israel stance. I've known Netanyahu for, some 40 years or decades. I've been involved with every prime minister back to Golda Meir. So you hear that kind of language, even as he's now dropped out, and his successor doesn't have that sort of experience and has a bit of a different angle on pressuring the Israeli government on this issue. So if there's any daylight on foreign policy between Biden and Harris, there is some on this issue. So it's a very complicated day because, she's presidential nominee likely for her party, but she's also still the vice president. So there's 3 different meetings going on here that could, just yield very different results.
Yep. Mar-a-Lago tomorrow with Donald Trump. Bloomberg's Michelle Jamrisco, thank you so much. Now today, former House Speaker Nancy Pelosi and other House Democrats said Vice President Kamala Harris can win against Trump in November.
It's all over, what's your name? It's all over. That's not how Washington should run. And under Kamala Harris, people's voices will be heard in a very different way than you're trading at the table with big oil, big pharma, big guns, big money. It's about the people.
This is the House voted to condemn Harris for the White House policy on combating illegal immigration, her role as the quote-unquote border czar, with 6 Democrats joining that Republican-led effort. For more, let's bring in Jack Fitzpatrick of Bloomberg Government. So, Jack, considering we just heard President Biden last night say he stepped down from the race in order to bring his party, unite his party together, 6 Democrats condemning the now presumptive Democratic nominee doesn't seem like a huge show of unity.
It's not unanimous unity, but it's sort of the exception to the rule so far for Kamala Harris. You look big picture, the fundraising numbers are good for her. The endorsements that have come in are good for her. 6 members who march to the beat of their own drummer. When Republicans bring fairly partisan things to the floor, you can count that maybe Jared Golden or Marie Gluesenkamp-Perez or potentially Henry Cuellar, these kinds of members are going to vote for a Republican initiative. They say the House of Representatives managing it is like herding cats. You can't get everybody on board. And so these are some 6 notable members, especially if the elections go well for Democrats. If they end up with a narrow majority in the House, these are names to watch for people who are not under the thumb of leadership. It could be a thorn in the side of a potential Harris administration. And 6 isn't a huge number, but they are notable people going against the grain.
We should note at the same time there was a direction from the Speaker of the House for members to cool the rhetoric here, Republican members, when it comes to Kamala Harris having been described by several members as a DEI hire. They'll have some time to think about this, though, Jack, because everyone's leaving, which makes it pretty difficult to get anything done. You specialize in appropriations. There'll be no appropriating till September when we're talking about a shutdown?
Yeah, there's not going to be much happening until the lame duck session, really. They have to do a stopgap measure to get past the September 30th deadline to avoid a shutdown, but no one has any expectation of making progress on key legislation to fund the government, to get ahead of the debt limit deadline that nominally is January 1st so they can bump it back a bit. The question is, when you bump this stuff back to a likely lame duck deadline, if Trump wins, does he want to get